hourly earnings, the unemployment rate. Would need to get a solid report, more than just something that's really been kind of average for the last 5 years. To me, if the Fed had really had September as a target for a rate hike, they would have signaled that when they were all out talking at Jackson Hole.
It seems like they were trying to, at least a portion of them were trying to jump on the market higher, right? But at issue, if you take a look at different data, is really jobs growth versus GDP. Yes, we had that stronger print for the second quarter, but GDP really lagging that jobs number. How does that gap, we have a chart, we can pull that up, wind up reconciling itself?
Well, that's the key issue. I mean, we've all had to really get up to speed on these academic concepts of potential growth and the natural rate of interest. The reality is there's not unanimity on the part of the Fed as to what all these pieces of data mean. Clearly, there are some traditional hawks out there, and there are some that just want to wait and see. So I think we're still in data watch mode.
How much does the dollar play into all the Fed's thinking? Because every time the dollar starts to scale back up higher, so we see a retrenchment away from a Fed hike.
The dollar is definitely an important factor here. I actually rank the dollar as one of my top risks to the U.S. economy in the next year. I think, last year we had a 20% appreciation in the dollar, and it really did hit our manufacturing sector. What we have to realize is that that sector is still the green shoots of a recovery, and the dollar is vulnerable to a significant shift in Fed rate hike expectations. But for now, the market isn't convinced. And I think with only 40% chance priced into a September rate hike, that you would really need to see a significant swing in expectations to really move the dollar from here.
So if you did have that, though, are we in the scenario where we were back in August, where you had the Fed signaling a September rate hike, the dollar moved in anticipation of that, caused volatility over in China with the UN, and it caused the Fed to pull back in September? Is that playbook on the table this time, or was that specific to last year?
No, it's absolutely on the playbook, on the table. I mean, Fed watching is the new reality show, right? I think it's been the breakout hit of 2016. We have all been just locked into this data dependency, and we've been here before. The Fed, I think, is setting us up for a December move, but a lot could happen between now and then. The elections, the big risk-off events that have hit the U.S. markets have come from abroad. Brexit, the Chinese equity market move, some revaluation in the Chinese renminbi. We really have to, while we keep our eye on U.S. fundamentals, remember that we're vulnerable to international events.
Well, sure, but then Bob Finch over at Amherst Pierpont Security says that's a reason to go in September, because you have 3 weeks of uncertainty versus 4 months of uncertainty if you wait for December. There is a portion of the Fed that seems to be on that camp.
There definitely is, and that's, I think, one of the problems. There isn't a consensus voice coming from the Fed leadership. I do have to say this: if we get some blowout, amazing September number,
200 that plus?
I think it would be 200 plus, unemployment rate significantly lower, average hourly earnings, you need the whole package. But if we get that with a pretty bow on it, and the market moves, if the Fed sees the green light, do they walk across the street? Maybe.
It's like the perfect scenario, right? You have to have everything in line. Even though they want to hike, they just still need the perfection.
They want to hike, yeah.
All right, Laura, good to see you. Thank you very much, Laura Ron, senior economist at FS Investments. Thanks for joining us. Caroline, we have Dan Moss out of Bloomberg News saying, look, you don't need the blowout. You just need in line, because the FOMC, at the heart, does want to hike.
Can I just go back to Laura's Fed Watch, the Dream Watch? I can see it on Netflix for the rest of 2016. It's the Soda Watch. We're going to be all over that data, Alex. Great stuff. Thank you very much indeed. Now, coming up, we're talking diamond lending, but a bling bling after